G'day and welcome to this week's video. This week we're going to have a quick chat about the property market. Now in recent times, in fact the last couple of years, there's been plenty of speculation and reports done within the media that we're in a property bubble and at some point in time the property may burst. Now I don't particularly disagree with a lot of these reports. Of course, like any bubble, the timing of when something may burst, that's a great unknown. But over the years we've had a great environment for increasing asset prices, and that includes the share market, and that is lowest interest rates we've ever seen, so cheap and easy money, and that has definitely pumped up the tyres of the property market. Now, considering whether we're in a bubble or not, and what could tip that over an edge, for me it's definitely around employment, and employment has remained relatively strong, and its interest rates, and they have remained low. But the official interest rate that the Reserve Bank set, and obviously the bank's interest rates, who get a lot of their funding from overseas, can be two different things. And to prove this point, just up on the screen now you'll see a part of a letter that we received for one of our clients for their self-managed superannuation fund loan. So at the moment you can see here their current interest rate is 5.3%. So that is a high figure, but the banks assess self-managed superannuation fund loans a little bit more risky, so they do add a bit to that. We know an owned occupier can get 4% or below. But what is remarkable here, where the Reserve Bank has done nothing, the already expensive 5.3% is about to jump to 6.15%. That's 0.85% increase on a loan. So for those marginal borrowers, the investors, where it might be negatively geared and they've got to chip money in, an increase like this will mean they've got to chip a lot more in. And I know there's obviously supply and demand issues. Even locally here, there's around 90 in our small town of Horsham, 90 rental properties that are vacant, and some of the reports coming out of Brisbane in the apartment sector, well, they're having trouble getting people to rent them out. So these are the sort of things that can start to tip any sector over the edge, and obviously supply and demand and the cost of money is going to play a big part. So interesting one we've seen during the week. This is a huge increase in the interest rate and the cost to the borrower, and that will affect obviously the ability to pay and also to hold these assets longer term. Thanks for listening. Give us a thumbs up if you like the video and subscribe to the channel. That'd be awesome, and we'll catch you next week. Thanks for listening.